Today we are going to do the asset disposal. So complete the asset disposal account in the general ledger for vehicle number 2, which was written off on 31 August 2021. So we are told that the year ends on 28 February 2022. So let's go to the transactions. Let's go to the transactions. The following details appeared in the fixed asset register of timber trees fellers on 28 February 2022. Then you are told that the vehicles they depreciate 20% per annum on cost. On 31 July 2021, vehicle number 2 was written off by the insurance company after a large tree fell on the vehicle, crushing it. As per the contract, 90% of the book value of the vehicle on the date of the accident was paid to timber. Okay, so what happened here is that a vehicle it was crushed. So meaning that this vehicle it is no longer in the business. This vehicle it is no longer in the business. So what is supposed to happen here is that we are supposed to go to the vehicles. We are supposed to go to the vehicles. We are supposed to go to the vehicles and decrease the vehicles with an amount of 367,500. Why are we doing this? It's because the vehicle it was crushed, so obviously we have to decrease our vehicles to show that this vehicle number 2 it is no longer in our business. So we have to decrease our vehicles. So before we do that, let's first talk about the asset disposal. What is the main purpose of the asset disposal? The main purpose for the asset disposal, the business prepares the asset disposal to check whether they made a profit or a loss when they dispose the asset. Its purpose is to check whether the business made a profit or a loss. That is the only purpose of the asset disposal. So if we are talking about disposal, it's as if we are saying that we are getting rid of the asset in the business. It's as if we are saying we are getting rid of the asset in the business. So obviously, if we are getting rid of the fixed asset in the business, so it means that the fixed asset of the business they have to decrease. So we know that the asset they decrease on the credit side. And then another information is that all the information that is about a fixed asset that the business is getting rid of, it must be transferred to the asset disposal. All the information that is about an asset that the business is getting rid of, it must be transferred to the asset disposal. Okay. So the business is getting rid of this asset, vehicle number 2, which has a cost price of 367,500. So because the business is getting rid of this asset after it was crushed, so it means that the vehicles of the business they have to decrease. So they decrease on the credit side. with an amount of 367,500. So this is transferred to the asset disposal. So you know that if something is recorded on the credit side, it must also be recorded on the debit side. So let's go and record on the debit side. So it's the vehicles, an amount of 367,500, and then so this happened on 31 July 2021. So it's July 2021, and then the next step. Now let's look at the accumulated depreciation. Let's look at the accumulated depreciation. So we know that this vehicle has been in the business. So meaning that the accumulated depreciation of this vehicle, it is included in the accumulated depreciation of this business. I'm saying that we know that um, this vehicle has been in the business from 1 July 2019, meaning that the accumulated depreciation of this vehicle is included in the accumulated depreciation of the business. But then um, just open the accumulated depreciation account. Just open the accumulated depreciation account. Accumulated depreciation on vehicles. So let's just look at vehicle number 2. Okay. So our year starts on 1 March 2021. We are saying it starts on 1 March 2021 because it ends on 28 February 2022. So our balance brought down for the accumulated depreciation. So it's going to be 91,875 plus 212,500. So meaning that when we started this year, the accumulated depreciation total on vehicles, it was 304,375. So, but then we know that this accumulated, it is including the accumulated depreciation for vehicle number 1 and vehicle number 2. Because the vehicle number 3, it was bought during the year. So it does not have the accumulated depreciation yet. Okay. So let's calculate the depreciation of the vehicle that was crushed. Because this vehicle, it was crushed during the year, meaning that before it was crushed, it has depreciated. So if we're going to start to count from 1 March to 31 July, it's March, April, May, June, July. It's 5 months. So we're going to say 367,500 times 20% times 5/12. 367,500 times 20% times 5 divided by 12 is equal to 80,625. So this means that before this vehicle was crashed, its depreciation it was 30,625. So depreciation. So we know that the depreciation it increases on the debit side. So this depreciation is for the accumulated depreciation. This one is for the vehicles. We know that after calculating the depreciation, it must be transferred to the accumulated depreciation. So it is 30,625. Then after we have calculated the depreciation of the asset that the business is getting rid of, then we have to add it with the accumulated depreciation of the asset that the business is getting rid of. So it's going to be 91,875 plus 80,625, which is equal to 122,500. So remember, I said that all the information that is about an asset that the business is getting rid of, it must be transferred to the asset disposal. So this total depreciation it's for the asset that the business is getting rid of, or the asset that was crushed, or the asset that has been disposed. So it must be transferred to the asset disposal. So accumulated depreciation on vehicles here is decreasing because this accumulated depreciation it is no longer our accumulated because this vehicle the business got rid of this vehicle, so we have to get rid of this accumulated because this vehicle is no longer in our business, so we also have to get rid of this accumulated. So to get rid of it we must decrease the accumulated depreciation, because we know that this money of 122,500 it's included here on the credit side, so we need to debit it so that we can decrease the accumulated depreciation. So because this information is about an asset that the business is getting rid of, we must transfer it to the asset disposal. So we know that if we record something on the debit, it must also be recorded on the credit side. So it's accumulated depreciation on vehicles. So it is July 2021, 31. So let me erase this first. So then they said, as per the insurance contract, 90% of the book value of the vehicle on the date of the accident was paid to timber. So let's calculate the book value. So the book value is the same thing as the carrying value. So to get the book value, we say 307,500 minus 122,500 is equal to is 245,000. So how much is that 90%? 90% of this is what? Times 90%, which is 220,500. So this means that this is the money which was paid to the business of timber. So if the insurance made a payment, so it means that the bank is involved, right? And then because this information is about an asset that the business is getting rid of, or is about an asset that the business is disposing, it must be recorded in the asset disposal. Remember, I said that all the information that is about an asset that the business is getting rid of, it must be transferred to the asset disposal. Okay, so the money that was paid to Temba, it is 220,500. So if it was paid, it means that the bank received the money, right? The bank received the money, 220,500. So because this information is about an asset that the business is getting rid of, it must be transferred to the asset disposal. So you know that if you record something on the debit side, it must also be recorded on the credit side. Then once we are here, now we need to check that which side is bigger. Which side is bigger? The side that is bigger, it is the debit side. It is 367,500. So this means that here we made a loss. We made a loss. So now we made a loss of how much? 220,500 plus 122,500 minus 367,500 is equal to 24,500. We made a loss of 24,500. So this is a loss on sale. Then we're done. Thank you so much.